Armstrong with Compass Consulting. Today, I want to talk to you a little bit about mergers and acquisitions. We know that bank and credit union mergers are not going to be slowing down, but we're seeing a lot more problems specifically relating to the wealth management side of things because of the recent evolution of wealth management within financial institutions, meaning these wealth management practices don't look like they did 10 years ago. They're much more private wealth oriented. We have much higher level of advisors that are working inside of community banks and credit unions, the result of which is a lot more problems when it comes to the M&A of financial institutions that have two competing wealth management platforms. We think there's an easy solution to it, but we're having a hard time getting this message out. We saw it again this year in New Jersey, where a bank bought another bank. They had two competing wealth management platforms that really operated completely differently from each other. It doesn't mean that you can't have a successful merger of those two platforms, but if you're the buying bank and you don't actually treat that merger event as a separate event, and run it as a separate M&A activity, you're going to run into huge problems. And in fact, this New Jersey bank did. They acquired this bank that had a very strong wealth management program. Because they didn't treat it like a separate M&A event, they ended up losing the best advisors from this program. There's hundreds of millions of dollars literally walking out the door, and you're not serving your customers' interests by doing this. So, look, I understand it's complicated, but I also think that the M&A side of things is not something that even the best program managers out there really fully understand. And certainly the bank executives, the executive leadership, and the M&A consultants out there that manage mergers and acquisitions of financial institutions, they definitely don't understand the wealth management side. It is a different animal. Even though it's part of the bank and credit union, it is a different animal. Our advice is simple. When you buy another institution or you have a merger event that's happening where there are two competing wealth management platforms that are run by two competing third-party broker-dealers, you need to treat that wealth management piece as a separate M&A event, and you need to manage it as a separate M&A event. And in my opinion, you need to hire someone like us or someone similar to us that has done this before that can help you manage that M&A event of those two competing wealth management firms. When you do it this way, your success rate will skyrocket, and you're not going to have the issues that this New Jersey bank had, where they literally just lost the best advisors of this other bank, and literally watching hundreds of millions of dollars walk out the door, which is just silly. It didn't need to happen. Treat this like a separately managed event that's going to help your customers. It's going to help your members. It's going to make a smoother transition of that merger event. Thank you very much for listening, and I hope to see you all soon.